So for objective 2, we're going to focus on payroll transactions. So payroll is a large current liability for any firm, but also I want you to have a better understanding of how your paycheck is calculated and how what all your employer has to do to record your payroll. So payroll, whether you're salary or hourly employees, is a major expense, but also it's a major ordeal for the company because it's not quite as simple as just multiplying your hours by your hourly wage and paying you for it. There's a lot that goes into it. There's a lot of payroll taxes, all of which have to be calculated. Now, I will tell you, I'm certainly not a payroll accountant. And so, um, this one little brief explanation here is not going to be enough to be able for you to go out and calculate payroll for a company, but I just want you to have an idea of how this is calculated. So the difference between what we call gross pay and net pay. Gross pay is your salary or your wages before any taxes are taken out. So this is not how much you get to take home. This is your wages before taxes are taken out. The net pay is how much you actually get to take home with you. Now, there are certain deductions that your employer is required by law to take out of your paycheck, and then there are certain deductions that are what is considered optional. Federal and state income taxes is a required deduction unless if you are what's called a regular employee, and that's the technical name for it, your employer is required to deduct federal and state income taxes. I know Texas does not have a state income tax, but many states do, and if you live in a state that does, your employer is required to deduct that. How much they deduct is based on how you filled out that W-4 form when you were hired. So if they're not taking out enough and you owe a large tax bill at the end of the year, then you need to go back and revise your W-4. I personally had to do that just this year because tax laws changed and they weren't taking out enough anymore. If you have a major life event, like you get married, you have a child, you get divorced, your child ages out and is no longer a dependent, you want to go back and revise that W-4. If you are a contract employee, then your employer does not have to take out these state and federal taxes. They don't have to take out any of the taxes. They just pay you your gross pay, and then you're responsible for paying all of your taxes. But that's really an exception, not a rule. Most people are what they call a regular employee. Also, they're required to take out Social Security tax. Now, Social Security tax includes two components, and we'll talk about this a little bit more. It includes what we call Social Security, which is really OASDI, and it includes Medicare. So those two things together make up what we consider the Social Security tax. And then any other deductions that might be required by federal, state, or local law. Optional deductions would be insurance premiums, if you automatically have money given to charity, if you contribute to a retirement plan, those are all also taken out. So again, Social Security tax, or what's called FICA tax, has two components. The OASDI is what most of us think of as being Social Security. That's that old age survivors and disability insurance. So your grandparents get their Social Security check every month. Technically, that's that OASDI. And then there's Medicare, which also is taken out. Now, as of the time of this recording, which is 2019, I will give you what the rates are right now, but keep in mind that they do change every year. So by 2020, the information I'm stating right now may not be exactly correct, but it's close enough. You don't have to know this. I'm not going to ask, if I ask it on a test or a homework, they will give you the rates. I'm just giving you this for informational purposes. So the tax rate that is taken out, the amount of money that is taken out for the OASDI portion currently in 2019 is 6.2%. 6.2% of your first $132,900. So if you make over $132,900, you are only taxed on the first $139,200. So it has a limit of $132,900, or those are what they call the max earnings. So if you make less than that, then you're taxed on 100% of your earnings. If you make more than that, then you're only taxed on this much of your earnings. So a little piece of information, Bill Gates hits his Social Security tax limit by January 3rd. Jeff Bezos, I'm not quite sure how to pronounce his name, but the guy that owns Amazon, he hits his tax limit, his cap, by noon on January 1. So he's done paying Social Security tax for the rest of the year. Whereas you and I, who don't make over $132,900, we pay Social Security tax 6% on all of our earnings. Medicare does not have a limit on it, but Medicare is taxed currently at 1.45%. These rates have stayed pretty consistent for the last several years. The limit, the max earnings, I should say, those increase a little bit every year. So just look at an example here. We see that this employee has gross pay of $10,000, but we look at his withholdings. He's got $2,000 coming out for income tax. He's got $267 coming out for Social Security, $145 coming out for Medicare. He has $180 coming out to pay for his health insurance and $20 as a donation to the United Way. So his paycheck is going to actually be $73.88. This is how much he's actually taking home, although he earned a total of $10,000. Now let's look at it from the employer's side. So when the employer, and don't worry about the numbers, I really want you to pay more attention to the accounts. When the employer does the payroll journal entries, they are going to debit an account commonly called salary and wage expense. They are debiting this account. This is for their employees, all of their employees, so not just the guy that we looked at on the previous page, but all of their employees. This is for their gross pay amount. So that's the expense. That's how much money they're actually costing the employer. It's just that you, the employee, don't get all of that, because out of that $28,580, $1,419 of that has to be sent to the Social Security Administration. $414 has to be sent for Medicare. $63.15 has to be sent to the IRS. $645 has to be sent to the insurance company. $60 has to be sent to United Way. So they're going to write a check to the employees totaling $19,727. So this is the net pay, which goes under salary and wages payable. But notice they're debiting the expense account for the gross pay. So when they actually cut the paychecks, they debit that salary and wages payable, credit cash. Again, these are for the net pay amounts. Now, that's not all that the employer has to do, because that Social Security and Medicare tax that came out of your paycheck, that's only half of it that has to get paid on your behalf. So half of it gets taken out of your paycheck. The other half of it actually comes out of your employer's pocket. So they have to, for example, match what's paying. So you're paying 6.2%. Your employer is also paying another 6.2% for Social Security. You're paying 1.45% for Medicare. Your employer is also paying an additional 1.45%. So really, the Medicare tax is not 6.2, it's 12.4%. And the Medicare tax is not 1.45, it's really 2.9%. So if you are self-employed, you have to pay both the employee and the employer rate. So you're really not paying 6.2 and 1.45, you're paying 12.4 and 2.9. So you're having to double if you're self-employed, paying actually a total of 15.3%. Also, your employer pays all of your state unemployment and federal unemployment tax. That cannot be withheld from your paycheck. Your employer has to pay all of it. And we call those SUTA and FUTA. And so those are paid out of the employer's pocket. So for example, the employer has to go back. Notice they're going to debit payroll tax expense for another $2,000. They've matched the Social Security and the Medicare, and they've calculated the FUTA and SUTA amounts. So the total expense for payroll is more than the employee's gross pay. If you remember, the employee's gross pay was 28,000 something, but it's actually costing the employer out of pocket over 30,000 because they have to pay not only that 28 plus an additional 2,000. So notice that when the employer makes their payment to remit all of these liabilities now to the various government agencies, I just want to point out, notice that they're paying double the Social Security than what was withheld from the employee's paycheck, double the Medicare. They're also having to pay, so when they keep your money, they don't really get to keep it. They have to turn around and pay it out. They're not keeping your money. Now, I really wanted to go over this just because I wanted you to have an understanding of how your paycheck is calculated, what your employer does with that money that they withhold from you, and I wanted you to understand that the Social Security and the Medicare, you're actually only paying half of it, and you're paying none of your unemployment. So you're really costing your employer more than what your gross pay is. So as an employer, when you hire someone, let's say you offer them $10 an hour, they cost you a lot more than just $10 an hour. So I just wanted you to have an understanding of how these are calculated.